Hi there traders, hope you had a great trading week and a fantastic weekend. Today's video update, I want to concentrate specifically on price action. Price action for me is the most important element of trading because it's the most up-to-date indication of the future. And as traders, we're speculators on direction, so if the price action can give us a pointer as to where the market is likely to go, this helps hugely in our trading. Now, some of you will be looking at this screen in horror. Some of you will be looking at the screen in regards to looking at how similar it is to your own screen. Now, I get approached by a number of traders who are looking to improve their trading or to turn themselves from losing money to making money. And one of the first things that I will target is I will look at their trading charts, because I see all too often charts that look like this, littered with far too many flashy indicators. Now, indicators are great, but we need to be selective with them. Traders who use 6, 7, 8, 9 indicators on their charts are not even going to be able to see the price action, and that is really the raw ingredient. So, as the topic of my video said, let's get into the detail of the price action first. Let's strip our charts back and let's get them naked. Let's get rid of all these indicators. So I'm just going to do that now and get the chart completely naked so we can have a look at the power of price action and what it means to us as traders. So just bear with me 2 seconds while I do that. And with any charting package, I'm using eSignal, but it's the same with MT4 or NinjaTrader. You can quickly remove indicators, just leaving the price action. And one final thing. And it's really easy to do. Just strip everything back, and you can pop them back on very quickly afterwards. Nothing to worry about. You're not going to lose them. And then finally, okay, great. So we're now looking at a completely naked chart. Price action in its rawest format, which is so powerful. And if you can get brilliant at understanding price action and using it to your advantage, I can assure you that your trading will improve greatly from that point. And I'm just going to have a quick look back in the charts, because one thing I want you to do is to do a little bit of work. This is something I did probably for 10-15 minutes, one day a week, just going back through my charts in time, in history, and just looking at the movements in the market and what creates these turning points, because essentially it's the turning points in the market that we want to take advantage of, because if we can get into that turn very early, it leads to efficient returns on our investments. So just having a look back at the market, we can see that the market moves up and down, up and down, up and down continuously. But it's these turning points where it moves from one market direction to another. So the move down to the move back up. These are the turning points that I focus heavily on trading. It's these turning points that get us into the move very early to then benefit from the big moves higher or the big moves lower. A bit like we saw with the trades that we've been going through in the past. It's trying to get advantage of those turning points in the market, and price action is the most up-to-date indication of the future. So it can give you the turning point almost by the bar. Yes, we will add on some very basic indicators and some horizontal lines going forward, but for now it's just about concentrating on really focusing in on the price action bar. So let's just go into that particular area there. Let's zoom in. So price had slowly climbed the stairs from this point all the way back in July. It moved up, pulled back down, moved up, and then pulled back down. Then we've got this lovely low test buyer bar, which initiates the move higher. Right at the top of this move, before the market then started to head back down, was this lovely high test bar, and that initiated the move back down. So all you need to do is just go back in time and have a look at these turning points. It's not about trading, it's not about how do we get in and how do we get out. It's just about looking at the price action, the cycles, and then what creates the cycles. Look for these repeatable patterns. And the reason why I want you to do this is because what it's doing is it's ingraining these pictures of ideal turning points, these ideal scenarios that have happened in the past. It's in ingraining it onto your subconscious memory. So you will use that memory bank in the future to trade in real time. And that's where the advantage of just spending a little bit of time 1 day a week, just going back through your charts where they're completely naked, completely raw, and just trawling through the cycles and the turning points in the cycles. As we can see, low test bars or pin bars if you're a candlestick trader, high test bars, or again pin bars if you're a candlestick trader. As we can see these turning points, they're very, very obvious. Go back through them, have a look at the turning points. Up, down, up, down. More often than not, they're initiated by a high test bar or a low test bar, and that is really, really powerful stuff. If we can then combine this understanding and this know-how with our indicators, then we can provide a very powerful combination for getting into that market at a very critical turning point. So that is the lesson for today. Very, very brief, very, very simplistic, but something that will have such an important bearing on your trading going forward. Just simply spending time on the charts, exposing your eyes to these key patterns that are very, very predictable and very repeatable, because then you will use that going forward. Another thing that it will do is it will really boost your belief system, because when you've seen how many times these patterns occur in the past, it will build your belief system that that's going to continue long into the future, and that's going to be where you're going to take advantage of these turning points in the market. Now, we're just concentrating on low test bars and high test bars at this stage, but yes, later down the line we'll look at other key reversal bars such as bullish outside bars, bearish outside bars, and inside bars. All these price action, powerful price action clues that give us confidence that a market turn is about to take place. And if that market turn does take place, we're looking to then put our money on that trade because we feel confident that it's going to do as we expect. So just spend a little bit of time going back through your charts and expose yourself to the naked raw price action. It sounds a little bit rude, but it's absolutely spot on in regards to helping you improve your overall understanding of why markets move in the way they do and their predictability. And that's going to help you hugely in regards to markets moving forwards. Okay, so let's now come off that and just go on to the trades that we've been looking at over the last few weeks, just to have a recap on those. So gold was one of those trades that we were looking to trade. It crashed into this resistance level, so we were a little bit nervous when we got a reaction there, but prices since continued to move strongly higher. So gold is continuing in its strong vein. Remember, we captured the move from all the way back down here off that level of support and this lovely bullish low test bar that initiated the move higher. We hit our 1% target. Our stop on our second position is now at break even, and we're just letting the trade run. What I'm probably going to do is, when we get the market, if the market over the next few days breaks the previous high, so this one here, I will then move my stop to just underneath this low area here, because this has created a new swing low. So my stop can then move from its initial break-even point on position 2 to now locking in another maybe 0.5%, 0.75% to add to the 1% that's already been banked. So gold is running nicely. Had a very bullish day on Friday, so I'm just going to let that run. Now that it's broken this key resistance level, hopefully it should push on from there. Okay, so that was gold. Euro GBP was another trade that we were monitoring very closely. We did notice that the trade that we were in had hit some support and had retraced through the week. But what we got is the next beginning of a phase 1, so the market has since pushed down significantly and is looking again very, very healthy for another hopefully 100, 150 pips to get down to this support level down here. So the market has had its phase 2, this phase 2 exhausted, and now it's running quite nicely to the downside. So that was the Euro GBP. Kiwi was the trade that we were in long from all the way back to around about here. We did have some high hopes for quite a significant push higher. The market pretty much faded towards the end of last week with quite a strong move down on Friday, which took out our break-even trade. So we banked the 1%, but the break-even stop has been hit. In regards to thoughts to this, it's still looking bullish from my perspective, even though we've had a strong move down. key area really is this previous low. If we break that previous low, then the market potentially is going to go lower. So I'll be keeping my eye on for potential long setups until this low is broken, because I still feel, based on my analysis, that the market still has room to go higher. However, if lows are broken, then it gives me a little bit more doubt on this trade, and I'll probably leave it alone at that point. So up until that point, still looking for some opportunities to buy on the Kiwi dollar, but if it does break this significant low, then we just have to leave it be and wait and sit on our hands. Australian dollar did a similar thing, very, very weak through the whole of last week. Took out our break-even stop. We did bank the 1% on it, which was nice, but took out our break-even stop on position 2, which is a shame, because again, like with the Kiwi, we had higher hopes on generating a greater return than just the 1%, but 1% is better than a losing trade, so we'll take that. Now that it's broken this key level of support, now we're looking for potential sell opportunities on this currency pair, and what may happen is that price, having now broken, may come back to retest this support level here. So the 8850 level may be a nice area for potential shorts if the market runs down a little bit lower and then comes back in its phase 2 to retest that area. So we're watching this one quite closely. And then finally was the one that we've done probably the most in-depth analysis on, was the FTSE 100. So as per my latest update last week on the blog, what we decided to do, because of this strong horizontal level being broken and this consolidation zone being broken, what we were able to do was pop our stop loss on our position 2 rather than at break even, to bring it all the way up to this 1% level, so that we knew that even if the market goes against us, we're still then locking in another percent to add to the 1% that we took on the position 1. So that's a great position to be in. This means that this trade is, as a minimum, going to be taking a 2% profit. There is a key level of resistance just a little bit higher, so we'll see how this goes. Friday did finish as a buyer bar, so it may push up a little bit higher, and then we may start to trail our stop again, but I'll let you know about that as and when we need to trail. But for now, we just leave it be. 1% is already banked, 1% is already locked in, and we've got another percent on the table, so it's showing a 3% profit. That's unrealized at this stage, so we'll just have to wait and see what happens in the early part of the upcoming week. But the power of getting into the market at a very efficient stage, this turning point at this support level, this big bullish outside bar that gave us confidence, the price action gave us confidence that the market wanted to go higher. We got into the trade very, very efficiently, and the market has run. When the market runs, we obviously want to protect the profit that we're earning, so we've then implemented a trailing stop on this trade to bank or to at least lock in more profits. So that's a really, really nice position to be in, and I hope, because we took this trade from the very beginning, I hope this has acted as a very powerful learning curve as to why these principles that I'm teaching you are so powerful. Now, with the FTSE trade, it's obviously running very nicely for us. With the Aussie and the Kiwi, didn't run as nicely, but we still managed to squeeze a little bit of profit out from them. So I'm never despondent, I'm never disappointed with the likes of the Aussie and the Kiwi, because I took them based on following a predetermined set of rules. There was a high probability setup that took place. I took that trade. However, it didn't fulfill its promise as much as I'd hoped, but we still were able to bank a little profit to add to our January performance. So that's a great position to be in. So gold running nicely, FTSE 100 running nicely, Euro GBP still running very, very nicely. Aussie and Kiwi have now finished, but we're still potentially looking for some further trades on those asset classes over the next week or so. Okay, so I'm going to wrap up there because it's been a good 10 minutes now, so a great time to wrap up. I wish you all the very best for the trading week ahead. I hope that you're able to go and spend a bit of time just going back through your charts with all of your indicators taken off, and just really honing your skills on the price action, looking at those critical turning points in the market, looking at the price action clues that happen more often than not at those turning points. The final point is, look at this point here up at this resistance level. Look at the key turning point. It was initiated by this wonderful pin bar, this wonderful high test bar that then initiated this huge move down. This bullish outside bar initiated that very, very strong move up. Now, not every single turning point is going to be initiated by your high test or your low test, but the ones that do, as we've seen with the FTSE 100, generate a fantastic return. So it's really, really important that you spend 10-15 minutes once a week just going back through your charts and really honing your skills on the price action. It will have a massive, massive positive impact on your trading skills, and the knock-on effect of that is your trading profits. So it's a very simple, very basic technique, but one that helped me massively, and one that will help you massively if you're prepared to put a little bit of work in up front. Okay, so the final point is just to mention that I've just had my springboardyourself.com blog updated, so you'll notice it's looking a little bit different. I've just had it enhanced a little bit, just creatively, to make everyone's experience a little bit more enjoyable. So it is new. There may be some teething problems, so bear with me for the first few days, but I hope you like it. I hope it adds to your enjoyment of the site, and please, as always, pass on the word. Anyone you feel may benefit from the trading side of things, or alternatively the fitness side of things, please do forward on my blog to them. Anyway, have a great week, and I will speak to you very soon. All the very best.